Today is May 22nd, 2026, and here's what's happening in crypto. You know, if you just glance at the markets right now, you'll see a really fascinating divergence. On the surface, things are definitely cooling down. Volatility is dropping off and everyday retail investors are stepping back. But underneath that calm exterior, there is a massive structural maturation taking place. Welcome to today's explainer. We're going to be exploring the iceberg of global finance. Beneath the surface of a cooling market, the foundation of global finance is being quietly rewritten. This thought really anchors our entire analysis today. Because when retail fear dominates the headlines, it is so easy to miss what's actually happening in the background. Institutions and regulators are literally building the infrastructure for the next decade of decentralized finance right now. We're witnessing this incredible split, short-term anxiety on one side, and long-term, highly calculated positioning on the other. So here is our roadmap for today. We'll start with the Bitcoin market pullback, look at macroeconomic frictions from the Fed, and dive into historic SEC regulatory clarity. We've got to address the elephant in the room first. As of today, Bitcoin is trading right around $77,419. After that really strong rally into the low 80s, momentum just faded. The price rolled over into the mid-77K range, and short-term sellers regained control. It's definitely a cooling-off period. But to understand why, we have to look past the surface price. Glassnode data shows a staggering 848.7% decrease in spot CVD, meaning a massive drop in buying demand and a sharp shift towards selling pressure. But at the exact same time, long-term holder dominance is actually climbing. Short-term tourists are leaving, but true believers are quietly accumulating and holding their ground. It's creating a layer of structural resilience beneath the market. And you can see this anxiety playing out in the options market too. The options 25 delta skew jumped 42.75%, meaning traders are actively buying downside protection. They're paying extra for insurance because uncertainty around the macro environment is rising fast. A perfect example of this retail exhaustion is billionaire investor Mark Cuban. He recently exited most of his Bitcoin position because he believed it failed to act as a hedge during geopolitical turmoil and dollar weakness. This perfectly captures today's mood. When the digital gold narrative gets tested by volatility, high-profile exits fuel even more retail fear. Which brings us to macroeconomics and the Federal Reserve. To understand why the market feels exhausted right now, we need to zoom out. The Federal Reserve is holding interest rates steady between 3.5 and 3.75%. And when rates stay high, safe cash yields suddenly look very attractive. That naturally reduces appetite for risk assets like crypto. Adding another layer of pressure, Kevin Warsh is stepping in as the new Federal Reserve Chair pro tempore. Combined with elevated energy prices and geopolitical conflicts, institutions are becoming extremely cautious. The money isn't gone. It's simply waiting on the sidelines for clarity. And that's exactly why the next section matters so much: SEC regulatory clarity. While the macro environment projects fear, regulators have quietly been building a rulebook for the future of crypto. Through Project Crypto, the SEC and CFTC have harmonized their framework. Instead of unpredictable lawsuits, the industry now has a more cooperative structure designed specifically for digital assets. This shift didn't happen overnight. It started with the Crypto Task Force in January 2025, evolved into Project Crypto Harmonization by January 2026, and officially became effective on March 23, 2026. This timeline is effectively a green light for institutions. The biggest breakthrough involves the Howey test. Under the new framework, once a network becomes sufficiently decentralized, its token may no longer qualify as a security. This creates a legally defined exit ramp for crypto projects. Even more importantly, the SEC explicitly exempted several categories from securities laws, including covered stablecoins under the Genius Act, protocol staking receipt tokens, and non-security airdrops. By legitimizing stablecoins and staking, regulators have effectively approved the core infrastructure of decentralized finance. This is a massive structural shift for the entire industry. Now look at how institutions are reacting. ARK Invest's Big Ideas 2026 report shows strong institutional interest in tokenized assets and DeFi applications. With regulatory roadblocks finally clearing, stablecoins and tokenization are poised to scale into core capital markets. And if you want proof of institutional conviction, look no further than MicroStrategy. The company now holds 843,738 Bitcoin worth more than $65 billion. That massive reserve acts as a powerful institutional floor beneath all the short-term market noise. But innovation and risk never sleep in crypto. Over the last 24 hours, Polymarket suffered a $520,000 exploit flagged by ZachXBT. Yet at the same time, the company is pushing for regulatory approval in Japan by 2030. It's a perfect example of the crypto industry's duality, technical risk on one side, and global legitimacy on the other. Meanwhile, Near Protocol surged more than 32% after announcing automated dynamic resharding, a major upgrade allowing the network to scale traffic automatically without human intervention. Even in a cautious macro environment, capital continues rotating aggressively into projects shipping real technological improvements. And that brings us to today's core takeaway. Right now, two completely different markets are unfolding at the same time. On the surface, we see retail exhaustion, macro fears, and cooling Bitcoin prices. But underneath, there is unprecedented regulatory clarity, massive institutional accumulation, and non-stop technological innovation. So the real question is this: while short-term traders run away from the noise, are you positioned for the structural silence? Stay curious, stay ahead. This is CryptoBrainz.